Hey, are you thinking about buying or selling a business? Join us May 3rd for the M&A Launchpad Conference. This is the premier conference for entrepreneurs, investors navigating mergers and acquisitions in the lower middle market. You're going to connect with top deal makers, gain insight strategies to take your business search and your business acquisitions to the next level. So get your tickets now at malaunchpad.com and use the code LAUNCH for $200 off your ticket. We're looking forward to seeing you.
All right, on today's episode, we interviewed Ryder Fyrwald, where we talked about basically, what it looks like to go buy a label manufacturing company. What does a label manufacturing company do? And more importantly, really start to focus in on how do you start to marry the business with the real estate, along with basically seller financing strategies to help you go accomplish the goal of what you're trying to accomplish. So Casey, what were some of your takeaways?
Yeah, I think that, one of the things that as a business buyer, I'm not always thinking, let's buy the real estate as well. If it makes sense, yes. But it does give you some availability, right? Because, there's different products out there. If the real estate's more than the business, you get a bigger amortization. I mean, there's all these things. So what I realized from Ryder, he understands the financial world. He understands how to structure the deals. He knows how to talk to the people that he's buying from and talk to them a lot about, how, why the benefits of an owner finance works and what it is. And I think having that confidence and that ability allows you to get into deals and make deals happen. And that's what they've done over the last few years.
And I'm a big believer you should always try to get the real estate, because again, with the real estate, what are people looking for? They're looking for motivated sellers. Well, if a person's selling their business and you basically take the position of, hey, we need to figure out the real estate also, they're going to be more motivated on the real estate and maybe cut you a deal or cut you favorable terms to help you accomplish it. And this is exactly what we're experiencing right now in a transaction, right? Where we did go after the real estate, got a pretty attractive deal, and it's a win-win. And so it's another way to kind of juice a deal and sweeten it up. And so definitely things to consider in this one.
Hey guys, go ahead and just pause the podcast for a second. When you're buying a business, you need to ensure the financial health of the company. The quality of earnings is mission critical. It doesn't matter what size business you're buying. Patrick O'Connell Advisory Group, they're dynamic. They do a great job. They're going to look over your shoulder. They're going to make sure that you're doing the right thing. And this guy's done over 200 buyers successfully, just like you. So reach out to him. And it's o'conneladvisorygroup.com. Click the link in our show notes. Can't live without this.
Hey, Ryder, welcome to the show.
Hey guys, thanks for having me.
You bet, man. So go ahead. You want to share with the audience a little bit about kind of what you do, and then we'll dive into how you got there?
Yeah, so we have a manufacturing business. We make labels and stickers, kind of anything that you would see in your fridge or medicine cabinet or shower, all the, food products, ketchup, mustard, hot sauce, bathroom products like cosmetics, hair products, hair gels, pharmaceuticals, kind of anything you can think of that has an adhesive label on it.
Was that something that you acquired? Was it something that you guys started?
We bought the business. So almost 7 years ago, we bought a small manufacturing business in Los Angeles. We bought the business and the real estate with it, operating out of a small 5,000 square foot warehouse in LA. Had 4 employees at the time when we bought it. We were looking around for a business to buy, kind of got into this whole world of entrepreneurship through acquisition, spent probably 6 months looking at a ton of different businesses. We were fairly agnostic. We knew we wanted to be in B2B. That was my partner and I's background. We knew we wanted to have a real estate component to it if we could. And then we knew, more or less how much money we had access to. And so we kind of backed into a couple of different industries that we were looking at. Manufacturing, packaging kind of ended up being where we ended up targeting. But we looked at HVAC businesses. We looked at flooring businesses. We looked at, other box businesses. We were pretty broad in terms of what we were looking at.
Yeah. So like most entrepreneurs, you didn't know exactly what you wanted, and ultimately you ended up finding a niche and you're like, hey, this felt good. But to help us maybe understand the business a little bit. So any product that has a label on it, right? You guys are printing it. Are you guys also designing it, or are customers usually doing all the design work and you guys are just the printing and then packaging it onto the product itself? Or are you guys just the printing?
It depends on the size of the company. We definitely try to work with medium to large size businesses. So the majority of the time, companies are coming in with their designs, and we're just doing formatting things, changing font sizes, moving things around. But we also do work with a lot of small companies that come in and they maybe don't have their designs fully locked in and they need design support. So we do have design capabilities. We've got graphic designers on staff. We can certainly do the design work, but we're not a design shop. So we don't, we're not like outsourced design really. We're more focused on the printing and the manufacturing side of the labels.
Got it.
So Ryder, what were you doing before searching? Right? What got you in the space, got you thinking about it? Did you read a book? Did you read an article? And then y'all were like, oh my God, this is amazing. Or did you guys know some people that had done this and you wanted to just kind of follow their footsteps?
Yeah. I've just been labeling people my whole life. So,
no pun intended.
Yeah. No, I'm joking. I had worked in tech. I worked for a couple of high growth venture backed tech companies, mostly in New York City. And then I spent 2 years doing debt and equity financing in real estate. And through those experiences, I realized I really liked working in B2B. I like the tech world, but I had come from a family background of entrepreneurship and being in business for yourself, and didn't have this idea of a business that I wanted to start. So I just started looking at, are there existing businesses that we might be able to buy that are run by, somebody who's looking to retire, maybe, kind of like my parents' generation of entrepreneurs who were looking to get out, where we could come and we could apply some of the new modern age technology, things that we've learned in our business careers to kind of an older, antiquated business. So we just started looking around at like what kinds of businesses were for sale. We went and scoured all the different websites online. We talked to, M&A consultants. We talked to lawyers. We talked to CPAs, really anybody who would hear us out. We went and talked to, and we ended up landing on this small packaging business. But it really stemmed from just an interest to be in business for myself, wanting to kind of go off and do something on my own, but not really having the idea that I felt like I wanted to start from scratch.
Yeah. And it's funny. So, I used to work at Microsoft, and I left Microsoft with the thesis of let me go apply tech to boring old industries, right? Like real estate. And that's ultimately where I ended up going. So similar mindset as you. And, the other thing you kind of almost glossed over, right? But I think it's really important for the listeners, which is you had the financial acumen, right? You kind of grew up, you did debt and equity structuring. I mean, there's complexities there that a lot of people get behind the idea of, hey, I want to go buy a business, but they don't really understand the mechanics of where money comes from, how money moves, right? And how pertinent it is to the business. And you at least had that background to help you, because most people don't go buy a manufacturing company as their first business, right? Those are usually cash intensive businesses, right? High CapEx businesses. And it's easy to look at EBITDA and ignore everything else that happens below the line, right? And having that experience, I think, gave you a little bit more confidence to be able to go do something like a manufacturing business. And so I guess with that said, I think the question I have is just, how did you find that business? What were the multiples? What was the purchase price? And how did you structure the actual acquisition itself?
So we were just sitting around at our place in Marina del Rey, cold calling basically businesses for 3 or 4 months. Mostly we were going on Biz Buy Sell, Deal Stream, BizBen, all these websites that exist. If you're selling your business, you want to get the most eyes on it, right?
Yep.
And so you're going to go and you're going to post it in as many places as possible. One thing that was important to us buying our first business was we didn't want to buy a business with a bunch of skeletons in the closet. So we were trying to look for well-run businesses without a bunch of ad backs. If you get into this business of buying small businesses, you'll see that people are running a lot of personal things through the business. We had a company that we were looking at where the owner was running his Botox treatments and his hair treatments like through the business. And it's hard to kind of sift through the noise and figure out how much does this business really make. Right. So for us, it was really important to find one that didn't have all those ad backs and was pretty clean. It was, here's the EBITDA, and maybe they're adding back the seller owner's salary and a couple of things, but it's not, $500,000 worth of ad backs. It was a small portion of it. So we knew we were comfortable borrowing somewhere between about $1 million and $1.5 million. We were going to do this pretty much all debt. We had a little bit of our own money to put into it, but we weren't going to go and take, $2, $3, $4 million worth of debt. We wanted to do it, kind of smaller, contained business that we felt like we could come in and operate and grow. So we found this business. We actually found it on Biz Buy Sell. believe it or not. We found it there, and this was 7 years ago. So people were doing this, but not, I think, as many people as are doing it today. So there was a decent amount of competition. But we ended up, our LOI got accepted, and we ended up getting into due diligence. The business, we ended up paying like $1,450,000 for the business, and it was doing like just under $500,000 in seller discretionary earnings, which is
nice.
about
a 3x.
About a 3x multiple. And this was in 2018 when rates were next to nothing. So our financing costs were a lot cheaper than they are today. It's a big challenge, I think, today is that your carry costs are going to be so much higher with where rates are.
Yeah. And how much debt did you take on? And I mean, was it a SBA note, or how did you structure that?
We were able to get some friends and family to lend us the money with pretty with promissory notes that we have stuck to and paid off. This was not like take some money and you never have to pay it back. It was, 6% interest loans that we took. We borrowed 90% of the money. So we borrowed about $1,350,000, somewhere around there. And we funded the rest with our own capital.
Nice.
Sorry, 80% was debt, 10% seller carry note, 10% we funded.
So you structured it like an SBA in a way, right?
Yes.
You used the friends and family. So, you kind of basically went out and
fundraised. It's soft debt, not vulture debt.
Yeah, I love it.
Yeah, basically.
Nice.
It's essentially soft debt, where if we missed a month of payments, which we've missed very few, but it's not like the SBA where, they're going to start coming after you or there's liens on everything. It was a little more friendly. Since buying the business, we've actually taken on some SBA financing. So there's been a couple of slugs of SBA debt that we've taken to actually replace some of the existing debt. So we've been able to buy down most of that initial debt that we took on and replace it with cheaper debt that we feel, now that we're a little bit more established, we were able to take on, other debt through the SBA and kind of other debt instruments that we've used.
Got it. And so then you said you bought it was 5 employees, 500-ish thousand of EBITDA or SDE. Where's the business today? And then I want to talk about kind of transition, right, of what it took to get from where you are, kind of day one buying it to where you've gotten it to.
Yeah. So we did just over 5 million in revenue last year.
Congrats.
So that's been, thank you. Compounded, 30 to 35% annual top line growth in the business. And we've invested heavily in the business. So we haven't kept those same margins. Our EBITDA was like just under $1 million last year. So as you grow, you kind of have to, especially when you're accumulating debt and all these different things, like you're having to kind of keep up with this growth. The other thing we did was we outgrew the space and we bought a much larger warehouse than we probably had any business buying. And we ended up putting some tenants into the space and growing into, now we occupy most of it, but our initial warehouse was $5,000. We were paying like $6,000 in rent a month. Now our warehouse is 25,000 square feet. We pay, $35,000 in rent, and because we own both entities, the real estate and the business, it's a really nice ability to kind of, move, the money between the two companies. Like our rent, we have a lease, we have everything. It's all legit how it's done. But if we need a couple of days of cash flow in the operating business, I can, push my rent out a few days if I need it. We've got a substantial loan on the building. So we got that loan also prior to interest rates going up. So we got a really good deal on buying the building. And that's probably been one of the best things that we did, I think, in this whole process so far, as making sure that we were buying the real estate. The first warehouse that we bought, we ended up selling and did pretty well on that. And then basically used that to move into the new facility that we bought.
And you didn't get the warehouse as part of the transaction, right? Initially, right? It was not that the seller sold you the real estate also, or did you?
We did. He did.
Oh,
yep.
Okay.
Yeah, we bought both.
So that 1.4 included the real estate, or that was just the business? No. Okay. Separately, you did another transaction for the real estate at which you felt like you got a pretty fair price that then just kind of appreciated in value over time?
Yes. So
this is in LA,
actually,
right?
This is in LA.
California.
Yeah, the
you
cheapest
got
way
some
to cut
great
your,
appreciation from those times,
the
right?
cheapest way to cut your costs is just move it to Texas, man. You can get like 3 times the space, I promise. So.
Well, we're actually considering opening up a facility potentially down in Texas. So I'm exploring doing that. We need to have the operation in California because we have a ton of customers there. We have 25 employees now that run that facility, but longer term, there's a ton of reasons why it makes sense for us to have a facility somewhere like Texas.
Yeah, that's awesome. So I love the concept of buying the real estate. So as a business guy, I've always looked at, when I look at the valuations and I look at the numbers, I've always said, hey, look, I want an option to buy the real estate. I'd rather just rent it from the owner. I've always kind of played that piece because, really when you start looking at the SDE and all the numbers, you go, man, if I've now got to buy the real estate, I now have a bigger note. And now I've got these other obligations that I've got to take care of. So I've always put that real estate to the side and said, hey, I would rather have an option. But it's nice to see that you guys came in and said, hey, we can kind of see this as a real estate business / using the business to get the great real estate financing, right? Because I do believe owner occupied real estate, you're probably getting 85 to 90% leverage on the real estate purchase.
So the first warehouse that we bought, we actually found some investors to buy the warehouse. So we found some investors, we participated, but mostly it was an investor group that bought the warehouse. We didn't take out any additional debt financing on the warehouse, which helped from a leverage standpoint, like not having to also be satisfying this note. In hindsight, I wish we would have bought both ourselves. There's an SBA program where you can buy the business and the real estate, and it would have been a combined probably like $3 million transaction. And I wish we had done that ourselves because of how much the real estate appreciated. At the time, I was hesitant to take on that much debt.
Right.
In a market like Los Angeles, where real estate, tends to appreciate, like we should have known that it was going to appreciate, but I had no idea it would appreciate the way that it did. I mean, we bought it for like $1.6 million.
No, life is much easier in hindsight. It's a lot harder whenever you're at the closing table and you need to commit, right? Trust me.
It's a lot of money.
Yeah. Every time, there's always regrets, and you made the best decision at the time you were there. So
yeah, but the second warehouse we did. So the warehouse we're in now, my partner and I bought the warehouse. We took out. It was very similar to an owner. It's an owner operator loan. So our terms are really favorable. Our interest rate's super low. It requires us to operate a business out of there. At least 51% of the space. So when we moved in, we were occupied like 51% on the nose because it was all we could really afford to do. And now we occupy, I don't know, probably 80% of the warehouse. We still have one tenant.
Traditional bank financing, or was it an SBA 504? Which programs you go with?
It's basically it's the same terms as the SBA 504, but it was through a private bank that just happened to have this program. It was very lucky where they were doing one loan of the exact size that we needed in each of their different branches around the Western US. So I think they may have purchased the SBA 504 loan from the SBA and then basically just repackaged it up and sold it to us. But it's the same, it's owner operator. We have to occupy 51%. This was 2021. So our interest rate is like sub 3%. And it's a 10-year note with a 30-year AM schedule. So we'll pay off a good amount of the note. I'll have to refinance the note in 7 years from now, but it's just
sounds like a great position.
Yeah.
So it sounds like you and your partner, right? You probably have different roles that you guys carry. Are you kind of the financial brain around? Are you looking for the leverage? Are you the one talking to the banks, kind of using your expertise, or is he more of the financial? Which one of you are always sourcing financing?
I typically source the financing and handle most of the bookkeeping. My partner is very smart and he understands it all too. It's just at some point you kind of have to segment your responsibilities. Yeah. He is much more mechanically inclined. He's understands the machinery. He likes, being in the warehouse and tinkering with all the equipment, So he's been the one who's been leading all of our machinery purchases. As you guys mentioned at the beginning, it's a very capital intensive business. So we've made some pretty big CapEx investments and he's been the one who has more spearheaded those. So he's decided which machines should we be buying, why, has been the one, overseeing like, the electrical installation, HVAC, all that different stuff. And just to segment the responsibilities, I tend to gravitate more towards handling the financing and everything. Not that he couldn't, but at some point you've got to separate the responsibilities. So short answer is yes.
Because I asked, because I'm, my background, I've spent, 20 years putting together financing, all different types for real estate, business, as a broker. And it was always my side hustle while I was doing these startups. And I've built a great book, but understanding all these different type of structures was really something that I feel like gave me an advantage when I'm sitting down with the seller, or I'm thinking through like, how am I going to put this deal together? Because I've done it so many times, structuring it for other people and doing those things. So having that financial knowledge of like all of these programs, like the 504 and different leverage that you can get, it allows you to get into deals. Like we're looking at a deal right now that is a SBA 504 qualifier. It's a kind of mix between business and real estate. And because I knew about the 504 program and this qualified for it, I was like, man, this could be a great opportunity for us. And so we've made it down the road on the due diligence for it. We're waiting for hopefully to get it approved. But again, knowing the loan programs and like learning about how do I finance the equipment, what type of line of credits are available. And I spend a lot of time doing that.
You can buy any business at any price if you can get the capital structure to work the way you need it to. So
I imagine all the debt and equity you've done in your career kind of helps you kind of think about that as you're putting these deals together.
Yeah, 100%. I mean, it's the financing is a huge part of this whole thing, right? You have to really, when you talk about, okay, 500,000 in EBITDA, well, that EBITDA has to go somewhere after you make it, right? So it's either, hey, if we own this business 100%, then yeah, it's going to be split between us and that's great. It's income. But majority of the time, if you have debt, right, you've got interest on your debt and then your principal payments come after you pay the tax, right? The principal is not tax deductible. So understanding that, and when you're looking at, you're modeling out your debt coverage ratios and how you're going to be able to afford all of this debt, you have to think about that. So we've had, by having these bank loans for our real estate now, we've had to really meet pretty strict covenant ratios. So we've done things like we bought a machine from a digital printing machine. So, some of the printing these days is moving more digital. There's still a lot of the old school flexographic printing, but some of the digital printing, there's a company that we bought it from, which is called Domino Printing. They're owned by Brother Printer, which you probably have a Brother printer in your home, or you have at some point. They have a financing arm of their business where they'll do non-recourse financing on these assets that you can purchase from them. And as a business owner who's taken on a fair amount of debt, having a non-recourse loan with an asset that they'll basically, lease to us is really, really nice to not have to go and take out a full personally guaranteed full recourse loan. Being able to do that has worked, been great. We did another machine purchase where we couldn't actually, it was about $1 million piece of machinery. So the machinery in our business is really expensive. We couldn't put $1 million of debt on our balance sheet and continue to meet our debt coverage ratios. So we did a capital lease where it's basically it becomes an expense item on your P&L, and instead of it being something that sits on your balance sheet, it goes on as an expense item. You don't get the benefit of depreciation, but you get to take it as an expense. So you still get to take it against your income. And ultimately,
can you buy it out?
We buy it out at the end.
Nice. Yeah. I love
so
it. We did our forklifts like that at H&M.
Yeah.
It was, it makes a lot of sense.
Exactly. I mean, it's for all intents and purposes, it's the same thing as buying a forklift.
Yeah.
But it's understanding that mechanism that you're talking about, right? It's like, you've got to, you could go take that loan. They're not going to, the printing company, they're not going to look at your debt service requirements, but your bank will. And so now all of a sudden, if you add that to your balance sheet, you're in trouble. So having that understanding is so critical when you're running the business, to have some of that financial mind.
Yeah. And question, has all of y'all's growth been just organically, or have you guys acquired anything to kind of roll in?
We just acquired our first tack on acquisition about 1.5 years ago.
Okay. What was that?
So it was a very similar size business to the one we bought originally, about $1 million revenue, label business. The way that I found this business was, I think it was kind of smart, but it's not rocket science. But I had one of my suppliers in our warehouse one day, and he's like, "Man, I just came from this other label company, and this guy is just like miserable. He's like 65. All he wants to do is like retire and go to Italy." And I said to him, "What about if we buy his business?" And he's like, "Oh, that might actually work." And so he introduced me to this guy. We didn't actually end up buying his business, but I started to think about this as, hey, let me go to the suppliers. So I sent an email to our 5 biggest suppliers and just said, "Hey, you guys are in these companies every day. Do you have any people that you work with on a daily basis that might be interested in selling their business?" A couple, I got probably 4 or 5 leads from this, and ended up finding one of these guys, started to develop a relationship with him. Took about a year to negotiate and get him comfortable with us, but eventually we were able to buy his business. So we did that a year and a half ago, and it added about $1 million worth of revenue to our top line. So beyond that, it's all been organic though.
Awesome. Did you have a nice creative structure? Were you able to get some good owner financing and all that good stuff?
Oh yes. Yep. Good. Very much so. We bought, it was about the same size business. There was some more customer concentration, so there was a little bit more added risk to it than the first one that we bought. And also we were coming at it from like a position of strength where we already had a business and we didn't really need to buy this one. The first business that we bought, we had been not working for 6 months and we needed to get into business. This one, we had an existing operation. We felt confident that we could roll it in. So we paid like $650,000 for the business, and the seller financed about 70% of that. Which is, when you're talking to these business owners, I think seller financing can be a really good win-win situation for an owner if you give him, an interest rate on the debt. It's, a lot of times the business owners that I talk to, if you've been running a label manufacturing business and you're 65 or 70 years old and you've been doing it for 40 years, there's a pretty good chance you're not like super financially savvy when it comes to investing your own money. You're probably going to get that money and maybe you're going to go invest it in treasuries, or maybe you have a 401k, or you know how to invest in the market. But, on the high end, you're probably going to make 8 to 10% yield if you're really good at investing that money. Most people though don't really know kind of what to do with that money. So if you go to them and you say, "Hey, listen, instead of me giving you, like, just for round numbers, like instead of me giving you $1 million today, let me give you $200,000 for each of the next 5 years. You're going to spread out your tax. You're going to get an interest. We'll pay you interest on top of that. So we'll pay you 6, 7, 8% interest. It allows me to buy the business without having to put down a ton of money up front. So it spreads out our risk, and it allows the seller to make some interest on top of his money. And it also helps him from a tax perspective. So that was kind of our pitch. And I think it's a good pitch for somebody buying a business that,
No, seller financing is so critical to making things work and done correctly. It's not a way to take advantage of a seller. It's actually creating a win-win where you can maybe get them better pricing, get them something else, but you're obviously getting, to reduce your exposure and cash in. So
and for the listeners, right? This is kind of the most important part. I mean, I have gotten better in my conversations every time I talk with the seller. I try to get that conversation up front. Like I try to get them to think.
Casey's been putting in the reps, so he's learned.
Yeah, I mean, I try to get it up front, and if I'm not going to get a flexible seller on seller carry, I'm in today's capital markets, right? Because shit's just too expensive, right? Mm-hmm. Everything is, like, from just buying equipment costs have gone up. Your electricity costs have gone up. Everything has gone up, and these guys know it. They feel it, and that's the thing people need to understand. Don't be timid to talk to the owner. He is selling because he is stressed as well. He might have owned it for 30 years, but every day is stressful because you get the electric bill and you're like, especially in a manufacturing business, you're like, holy shit, we spent a lot of money on electricity. Oh, and guess what? The data center conversation's coming and everybody knows electricity costs are going to go up. So how do I manage this? And he's like, dude, I'm 65. I'll let you handle it. Just put a check in the mail to me every month. And I'm finding this conversation more and more now, where these guys are more opening. I mean, I've been like you, Ryder. You started in 18, I was in 19, and I've had a lot of conversations. And in 19 and 20, people weren't, COVID, people are like, we don't know what the hell's going on. But then in 21, these owners started to loosen up a little bit on these terms. And tell me if you feel it too, it's like, and now when you're having these conversations, I feel like these guys are very open and they understand that if I get an SBA loan and I have to pay 10, 12%, it's quarterly adjustable and I have these terms. One, I'm at risk with the business because there's not a lot of flexibility. Two, if you put too much leverage on these business and costs continue to go up, the numbers don't work. And I think that's a real conversation that we're having.
Absolutely. I mean, I anybody who is in business understands that costs are going up, across the board on all your inputs, and your material costs are going up. But also, like you said, interest rates have completely changed from where they were 4 years ago, and the cost to carry and support a bank note or a SBA loan is significantly higher than what it was. And it's really, really hard to be able to make that work if you want to grow the business. If you want to keep it kind of status quo, then, maybe it's a little bit easier. But if you want to grow the business, which the majority of people getting into this do, you need to be able to structure some sort of creative structure with the seller. And I'm finding, definitely as you are, Casey, that the sellers are a lot more open to it. And if you can just get them to understand that you're going to still get the same amount of money, you're actually going to get more because you're going to make interest on it. And hey, you can go and invest this in treasuries and you can make 4%, or I can pay you 7% for the next, 5 years on that money. And you're going to get a check in the mail every month, and you're not going to go and spend it all at once and spread out your income for the next 5 years. Then it's a really, I think, productive way for sellers to get out of the business and make some money, but also for you to be able to kind of spread your cash flow out.
Yeah,
So.
and I think with the internet, sellers are getting more educated. So before it was like, oh, don't ever do an earn out, right? Versus now they understand. I mean, earn out is a tool, right? Everything's a different tool for a different reason. So I think sellers are getting more educated. So it's easier to start having some of these conversations where you're not starting at square zero. So that's what makes it a little bit kind of more attractive in today's environment.
Yeah, I mean,
you can pay a little bit more.
Yeah, and then and kind of in just wrapping up before we get into our other questions, I mean, this is a very important part of this M&A journey, right? Is, one, I've got to find a business. Two, I've got to be able to structure the business with the lender. But I also need to understand all of the different ways I can put this deal together and put it in the advantage of the seller, right? Because at the end of the day, you can tell them all day long. If they don't agree, good luck. And so having these kind of conversations, and I have also been finding that some of these guys, a lot of them have been wanting to dump their real estate. And so being a real estate buyer is not a bad thing. There's also sell leasebacks, which relatively new to my conversation. You can do a sell leaseback. There's all kinds of vehicles and things that you can use. It's just getting educated. And so that's a big part of it.
Absolutely.
Right, awesome. Well, we'll go ahead and move on to our rocket round where we ask the guests the same 3 questions. So first question, Ryder, what do you like to do in your free time?
My favorite thing to do in my free time is probably to play golf. Big golfer, like to play ice hockey as well. I've got a wife and a dog, and so we do a lot of walking. And we've got a baby on the way due in 9 days. So,
congratulations!
Right around the corner.
You're about to have a new hobby.
Yep.
Good luck. Say goodbye to golf, brother.
Yeah, I know. So it's been awesome. Fun. But yeah.
Question number 2: what's your most memorable moment in your business journey?
Most memorable moment in our business journey was probably when we moved into this new warehouse. There was a couple month span where we ended up moving the business from our old warehouse to our new one, and just going through the process of moving a manufacturing business. And, it was just great. We had, trucks and straps attached to things that probably shouldn't have been attached where they were attached, and, had all these employees that were moving things with us and trying to just coordinate, when machines will be up and running again and customers. And so I think that was probably the most memorable thing for me, was going through that and now being in this facility that we're in, which was such a major upgrade for us. So that's probably, when I think back on it, that's probably one of the most memorable things, was, going through that moving process.
And the last question, favorite tool or resource?
Favorite tool or resource? We use something called label tracks in our business, which is a super productive way to manage like production schedules and lead times and things like that. So it's kind of a boring ERP tool, but for our business, it would be, we went through several years where we didn't use it. And, now we use it pretty much every day. So beyond that, I mean, I would say like, I'm a big Gmail and like Google Docs and kind of Google Suite lover. So I'm always in like Google Sheets and Docs, but within our business specifically at label tracks, and then more broadly, like for the listeners who
is label tracks just for label manufacturers, or is it more just manufacturing companies?
It's for kind of anything like packaging related. So you can also do a lot of flexible packaging. Like, you think flexible packaging would be like chip bags and granola bars and things like that. So it's kind of for anything that has these giant rolls of input that you're trying to manage schedules and things like that.
Got it. Cool. Awesome. Well, then I guess, Ryder, how can people get a hold of you?
You can find our websites, just coverlabel.com, coverlabel.com. My email is Ryder, RYDER at coverlabel.com. Our office phone number is listed on the website. You can always, but easiest way to get a hold of me is definitely email.
Beautiful. Awesome. Well, Ryder, thanks, man. Incredible story. Love what you're doing, and really appreciate you being here.
Yeah, thank you very much.
Thanks a lot, Casey. Thanks, Feras. Appreciate it.
Thank you for listening to the M&A Launchpad Podcast. If you've enjoyed today's podcast and would like to support us, please leave us a rating and a review after you listen. I'm Casey Minshew, and I look forward to talking with you next week.